Okay. S&P, right? So you can see what I mean by volatility. Okay. Basically, it just spent like one day or good half day, came down, go up, come down, go up, come down, and then go up. So the move here is not really very impulsive in one direction. Okay. Overall, it's coming down fairly strong, but you can see that as it's coming down, it does a lot of V shape, right? Okay. So this one here is what we meant. Number one, volatility is quite difficult to actually be trading within this kind of environment. Like you try to catch the drop and then it V-shaped back up. You try to catch the rally and then it just came back down pretty fast as well. Okay, so in this kind of environment, it's very difficult to kind of trade it internally. Okay, but of course, quite a bit of our stock positions are also being hit by the down move. Now, am I overly worried? Of course not, right? Because I always highlight the importance of understanding the worst case scenario, understanding your downside, right? Putting in your risk management, okay, and know what's your limit, right? So that's the entire part of how you manage your risk. If you do that well, honestly, there's not much that you want to, I wouldn't say one, there's not much you really need to worry about. Okay, so actually, if you start to feel a bit of like anxious and anxiety with this kind of drop, okay, I would say to a certain extent, probably you have risked a little bit too much, right? And that risk has kind of like made a significant impact in your emotions and your psychology. Okay, so you might want to review onto that. Okay, of course, alternatively, you might want to also maybe have certain stop, right? Because for me, the style that I'm managing my entire portfolio, okay, I do not have a hard stop in terms of some of these stocks over here, okay, especially on, let's say, the seasonal portfolio, the longer term play, I don't have a stop, okay, but I jolly well know what the maximum risk is, right? Because number one, I don't leverage, and the maximum risk is basically whatever investment I put it into that particular trade, I know the worst case scenario is that trade can go zero. But of course, the potential of that going zero is very, very low. Okay, so that is something that you want to review. Okay, if recently this kind of move over here kind of caused you to feel anxious. Okay, now I want to give you a perspective where if this kind of move here caused you to feel anxious, okay, I just want you to take note, right? The recent move, yes, it's coming down, but it's coming down and then going up, coming down and then going up. Okay, so it's not as bad, right, versus what has happened back in March 2020. Look at that. Okay, this here has no up, down, up, down, up, down. It just went down. Okay, so why I want to do this simple comparison here is because I want you to take a look at a bigger perspective where if here you are feeling anxious, okay, and you can't handle this kind of environment, this kind here will basically just wipe out and kill you entirely, okay, quote unquote, okay. So, you know, I want you to really, as you know, while we don't have a lot of activity recently in terms of like trades running and entering, exiting and things like that, right? We don't have a lot, okay. In fact, in terms of equities for this entire week, I would even suggest like to stay on the sideline because of all this movement, right? You want to, you know, then take this opportunity to kind of reflect upon like all these little things other than looking at the strategy and the execution element. Okay? You need to handle that aspect of psychology as well. Okay, so you know, if this you can't handle, there are so many times in the market where you're probably gonna feel that anxiety. You're gonna probably feel that, you know, panic mode. Okay, you know, this is about like what 1 year ish. Okay, and if you can see here, 1 time, 2 time, 3, 4, 5, 6, 7, and then this is the 8, right? Very, very loosely, maybe about 6 to 8 times, okay, in a year. Okay, if you kind of like get I mean, you don't protect your mental capital, okay, which is your psychology and your emotions, you're gonna had a very hard time kind of like being involved in the market, right? So that's why psychology over here is pretty important. Managing your emotions are pretty important. Okay, because that's one part I want you to be aware of. Okay, but having said all this, we did update you guys as well in terms of like the macro environment right now is -2, which also of course prints and suggests that we want to be definitely very, very cautious, okay, and not just like, just buy up every dip, okay. In the past, when the macro environment is like +3, +2, every dip here is a buy opportunity because we are very confident of that reversal if the macro environment is supportive of that. Okay, but of course, right now the macro environment is -2, which means that every dip right now is not definitely a buy opportunity. Okay, and that's something you want to keep an eye on, right? Because this can easily go back up in a very, very corrective way and then give us another push, because the macro does not suggest very, very supportive to the upside already. Okay, so this is something that I hope you guys are aware as well. Okay, where there is a difference between just 1 year ago when the macro environment is strong and the market is coming down, we are very confident in buying it up. Okay, but for now you realize that I'm not really kind of like looking to get involved every dip, okay, because the macro environment suggests otherwise. Okay, but that does not mean that we're gonna see a crash. Okay, so don't align in a way where, oh, the market is dropping and therefore it's gonna be a crash. Okay, not necessary. Okay, as I mentioned, right, this dip here doesn't seem to be very, very impulsive. It's coming down fast, but it's not very impulsive. Okay, what's impulsive is something like that. Okay, something like that, right? If you just isolate this portion, this is what we call impulsive, right? If you isolate this here as well, this is what we call impulsive. You see a very clear move, a little bit of consolidation, and then the next move down. Okay, but for this current drop, again, I want to highlight, there is no such pattern, right? It's really just V-shapes happening all the time. Okay, so it's a little bit of what I call limbo, right? Because the sellers are there, the buyers to buy it back up are there, the sellers are there again, the buyers are there again. Okay, so it's a little bit of like cha-cha, okay, like dance move. Again, when things are not clear, we just give it time. Eventually, it will do something that is clear enough for us to make a decision. Okay, yeah. So that's on the equities market in general. I'd like to highlight onto that.